I recently added Uber as my top stock to buy in 2025, so I'll be increasing my coverage of Uber stock to let my viewers know why I've upgraded this stock and the reasons why I'm bullish on this investment. So in this video, I'll dig a little deeper, look at comments made by Uber's CEO to check out the latest developments at the company and what's going on with Uber stock. Let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Uber CEO Dara Khosrowshahi recently said that the most recently completed quarter was yet another quarter of increasingly profitable growth for Uber. Gross bookings grew by 20% year over year, and it grew for two reasons. They're getting more people using the platform. MAPCs are up 13%, and the same people are using the platform more frequently. Trips per MAPC were up 4%. So more people on the platform, and the existing people on the platform are using it more frequently, which is difficult to achieve when you're adding so many new users, because in most businesses, the new users are the ones that are not interacting most frequently. Your legacy users, those people that have been with you for a couple of years, those are the people that utilize your product or service more frequently than your newer customers. And it's like that in almost every case, right? In fact, on my YouTube channel, the people that have been with me since last year are probably watching my content more so than someone who's just now seeing my content for the first time. Uber is no different, right? But Uber is still growing the trips per MAC average despite the fact that they're adding so many new customers, which makes that growth more impressive than if it was growing MAPC by just 4% without an increase in the number of new users. I hope that's clear. If it was a little bit not, ask about it in the comment section. I'll be happy to clarify that concept further. So combined with their cost discipline, it translated into $1 billion in GAAP operating income for the first time in a single quarter for Uber. And that's what I've liked about the business in recent years. A couple of years ago, 3 years ago, 4 years ago, 5 years ago, I wasn't saying this about Uber because the business was growing, but it was growing unprofitably. It was growing, in my opinion, wastefully. And that was under the previous management team. And I've given Dara Khosrowshahi a lot of credit as CEO of Uber for turning things around in a relatively short amount of time at Uber, from a company that was focused on just growth at all cost and wasn't able to really control spending or control growth in an effective, focused manner. They were just like, let's just grow, let's just spend money, let's give everybody a promotion to use our service, let's give everybody free money to order food and free money for rides and all these discounts and incentives. And sure, it worked to add new people to the platform, but it was coming at the cost of huge losses on the bottom line, which were not sustainable and hurting the industry overall. But under Dara Khosrowshahi's leadership, the company has turned it around significantly, as is evidenced by this $1 billion in operating income in the most recent quarter. So that kind of talked about the demand side of Uber's business, customer interest in purchasing and ordering rides and ordering food for delivery. But I also really like the other side of Uber's business, and that's the supply side, the cost of supply, which are the drivers. And in the most recent quarter, they now have a record 7.8 million drivers and couriers on the platform. Now, if you imagine, unlike most businesses, when you attract an employee, you're not getting assets from the employee, right? So let's say, Alphabet, Google hires an employee. That employee is not providing Alphabet with a high-powered computer, laptop, um, office space, etc., right? But with Uber, the business does get assets along with an employee, which is, in some cases, the asset is arguably just as valuable as the employee, because sometimes the employee might not be putting in as many hours, or sometimes the employee's asset is so valuable depending on what kind of car they're providing to the platform, right? Some employees bring with them a $50,000 car or a $75,000 car to use as a driver on the Uber platform. And so that's a massively valuable asset per employee or per driver, in this case per courier, and they've got 7.8 million and growing. So each one that comes in is at least bringing in, I don't know the exact number, but I think there's a minimum quality of a vehicle that's required to join Uber as a driver or courier. And so I would assume, I'm just speculating here, that the lowest price vehicle that you can bring with you to drive for Uber is, let's say, $10,000. So each employee, each driver is bringing with them a $10,000 asset that Uber gets to utilize without paying for. Uber's not paying for the asset, right? Uber is just paying the driver on a per trip basis. If the driver doesn't complete a trip, the driver doesn't get paid. So this supply side dynamic for Uber is very attractive to me. It's something that Uber gets to benefit from without paying for, and gets to generate returns on assets without having to pay for the asset, which is an attractive, very attractive characteristic of Uber's business. So the CEO goes on to say that they believe core growth will come from both favorable long-term trends, for example, the broad shift towards services spend and growing consumer preference for on-demand convenience, as well as geographic expansion, including expansion outside urban cities where their network is less developed, and it remains a massive opportunity. And I agree with this statement, and let me frame this in a different way. Consumers are growing to realize that their time is worth more to them than a few dollars. So if they can pay $5 or $10 as a delivery fee to have their food delivered, and it saves them like an hour of time, they're going to do that, right? And you might say it's not going to save them an hour. Well, I live in Los Angeles, and thankfully our family is not in the epicenter of the fire region. But if we were to just go to our local Chipotle, let's say we order online and just to go to pick up uh, from our local Chipotle, it would be an hour long trip because of the traffic, looking for parking, the long lines at the Chipotle. It would be an hour long trip here. The city is so crowded. And I'm sure there's other cities like this in the United States and in the world where, okay, so let's pay $5 or $10 for the delivery fee instead of spending an hour of our time battling traffic and overpopulation and the crowds to go and pick up our meal. So that's one part. The other part is owning a vehicle has become so expensive and so inconvenient. If you don't have to own a vehicle, people are now seeing, especially if you're single and you don't have a family, the cost of ownership is so high. If you include maintenance, gas price, insurance, parking, monthly payment on the vehicle, it's so expensive that it might actually be cheaper to just use Uber for whatever rides you need. And then you also don't have to pay for insurance. You don't have to pay for gas. You don't have to worry about parking. And this is especially convenient for those individuals. And here in Los Angeles, there's a lot that live in apartments and don't have a family, or they're single. And it's just so much more convenient. I wouldn't, if I was single, it would be a no-brainer for me. I would not own a vehicle. It is just not worth it. It's so expensive. And if you have the option to just use Uber whenever you want, and then when you couple that with the fact that remote working, at least for a day or two during the week, is becoming more popular, so you don't need to transportation every single day of the week, those trends are working in Uber's favor. So I hope this elaborated a lot on what's going on with Uber and some of the reasons why I like this stock, and I've rated it as my top stock to buy in 2025. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.